Hey everyone, Andy Moss here at TradingAdventures.com with your look at the weekly charts here on Sunday evening. Last week we looked at the S&P 500 and we're watching a couple of things. We had a trend line that was acting as first resistance back in here and then support the last few weeks. And we saw first a breakdown possibility followed by a potential recovery. This was one trend line scenario. Another one that I have drawn over here on the SPX was this horizontal trend line. Either way you like to look at it, price broke out well beyond both this week. And we looked at also a potential hammer recovery pattern here, or reversal pattern I should say, on the Qs right at the VWAP from the March 30-week candle lows, and we noted that it needed recovery. It had found some support here the last couple of weeks at this previous low and that anchored VWAP just mentioned, and I've mentioned that it needed to be confirmed with a move back in the positive direction. We saw both of those things happen this week with a strong move higher across markets. So let's dig into the action here, look at what the weekly charts have told us, listen to what the message of the market might be, and prepare for the week ahead. Before we do that, we're coming down to the end of the summer, the beginning of the end of the summer. Most of the leisure travel is already taken place. We've got the last kid moved back to college this weekend, and the schedule should get back to a more normal Saturday morning cadence for the weekly chart reviews here. So thank you for indulging me on a bit of a variable posting schedule here the last many weeks in a row. I appreciate you still being here, and we will get back to a more normal deadline in the weeks ahead. So looking at, before we jump into the weekly charts in depth, let's take a look at the opening futures action here. It's not quite 7 p.m. The futures are moving around, and looks like we're just a bit of a mixed bag here. S&P futures down about 0.14, NASDAQ futures up about 0.04. So we're chopping around here, quiet Sunday evening so far. And that's something that I like to look at, is just for a glance, just to help set the stage for the week ahead, looking at the 6 p.m. Sunday futures and see what the attitude might be. And right now it is very quiet. We can look at the Russell futures testing their 2-day anchored VWAP here. Everything is making higher highs and higher lows, which needs to be confirmed with a move back above these highs on the S&P futures up here on the Qs. But for the most part, higher highs and higher lows above a rising 5-day moving average. So that tells us the buyers are in control. The market is innocent until proven guilty. And getting back to the weekly charts here, that corroborates what we've seen in the weekly candles here and the daily chart as well, which we'll take a small glance at here in just a few minutes. So we've already covered the S&P and the Qs. Both confirmed their hammers last week. Both are back above the moving averages. The 4-week just rising here. The 10-week is also rising a bit. Qs still have a little work to do on those shorter term moving averages because those are still sloping downward a bit. But this is the action that I was interested in, this big green candle confirming this hammer above the VWAP there. So the Dow off to new weekly highs, didn't close up near the highs of the week, but that's still a very strong move. And Russell 2000 likewise confirming this smaller candle here, but defended this 1.618 Fibonacci extension very well. This was acting as support the last 4 weeks in a row as the moving averages curled over or flattened out right here above that. And so this is, in my opinion, a very meaningful confirmation and move back to new weekly closing highs there on the small caps. That's a good sign for the risk on appetite around the way. Bitcoin still struggling with this 65,500 level. I need to see Bitcoin get and stay above this level. We saw it act as support back here. It's become resistance in recent weeks. Price did get above the moving averages, but they're still choppy and crossed over and not in the best shape there. So nothing to be overly optimistic on for Bitcoin there on the weekly time frame. And meanwhile, the dollar is perhaps helping stocks a little bit. We see here we've got just a little bit of action so far in the new week. But the last 2 weeks, it has come back into this shaded range. It's back below the 4-week and the 10-week moving average. The 40-week is down here. It's above this level. It's below the VWAP. It's just still chopping around. This breakout did not produce a run higher as of yet, and we can continue to watch the dollar just to see what it does. Likely we'll see more downward to choppy action there, and volatility still very sleepy and falling lower. Looking around the world at the all-cap world ex-US, this is a new weekly closing high on the ACWX index ETF there. That's a good sign around the globe. China specifically continuing to try to hold this improvement. A little bit of a consolidation week in here in the very high upper ranges of last week's big candle, but still below a declining 40-week moving average. RSI turned back lower just above the 50% level, so maybe not quite out of the woods yet there for China. Bonds are a bit of a bounce. Yields are the focus for many here in recent weeks as bond prices go down, which we know means yields go up. This is the aggregate bond index trying to recover a little bit here, but stuffed by the sharply declining 4-week moving average. By the way, the 4-week on the weekly chart is very similar to the 20-day. Notice both of them dashed red lines here on the daily chart. So just to point that out again, Treasury bonds, similar action, trying to hold this reference level here, which are the lows back from late 2023, but plenty of work there to be done if we're to see higher bond prices and lower yields in the weeks ahead. Crude oil had this nice breakout a couple weeks ago, 4 weeks ago, and now last week's action further declined back down, testing the rising 40-week, but below the shorter-term moving averages, below this VWAP, which was the lows before the big breakout. Gold confirmed support here pretty well with a very strong move up last week, and here again we see just a little, this is just over an hour's worth of action here on gold so far to start the new week, and it's just razor thin so far right here at the level of this little high from back in October 25. So if gold is going to mount another run, it needs to hold this level, number one, and number two, it needs to get back above the VWAP from the high. That's the orange line, and then the 40-week moving average, which is still rising just a little bit overhead there. RSI right back in the middle of the range and flat. And circling back to risk on, risk off measures a little bit, growth versus value takes a solid move back in the favor of growth. It's still in a downtrend, still below a potential resistance level here, and it's potential because it was support over here a couple of times. Now we're just testing this, so it was maybe perhaps a little resistance here on this slight move higher and didn't quite touch it so far last week, but that's a move in the right direction for a risk on, risk off measure. Consumer staples versus consumer discretionary, and I said that backward. This XLY is consumer discretionary, XLP are the consumer staples, and that is another move in favor of risk on here as we saw more buying power go to the discretionary asset class. And finally, we'll look at high beta versus low volatility. No surprise, a similar hammer candle here, which got confirmed with a move back in favor of high beta. It did touch this moving average, and which is where it stopped for the week. So can we see this continue on higher here with overall stock prices in the week ahead? Semiconductors, still chopping around here. It's a nice week. It's an outside candle encompassing all of the action of last week's open and closing prices. Didn't get all the way down into this lower shadow, but the bigger point is it's between the moving averages, which are slightly declining. It's between the VWAPs from the lows and the highs, and no real resolution there. But if we're going to see semiconductors as a group continue strength, they need to get, SOXX specifically, needs to get over about 560 to 561 and stay there, and perhaps mount a larger move back up into the area of 650s. The biotech group, as represented by XBI, had another nice bounce. It gathered support here at the rising 10-week moving average and back up over the last 2 weeks, almost encompassing the last 3 weeks of selling here. As a matter of fact, this candle here opened at 157.23, and we closed this week at 157.85. So yeah, this buying action here negates the previous 3 weeks of selling. So that doesn't mean it goes up further this week, but it is a good sign. So if we can see Biotex go back up into a new high, then perhaps we see it move on. And I got to zoom way out here to get all the way back to this high of February 2021. But that would be the next level of interest above after it gets past this high here, which was 165.71. So there's a couple of reference points there to watch on XBI. Software stocks, which looked somewhat promising but overall choppy and messy last week, got a big move higher this week. There were a lot of well-received earning reports in the software group. Microsoft continues to be a very strong leader after its recent debacle, and now we see, and this is a little messy here, but I'll just draw in another reference area right around a little over 100 up to about 104 for IGV is the level it needs to get and stay above. It's pretty extended here in a matter of 1 week, really. Last week it was just above the moving averages. This week it's well above the moving averages and into this area. So maybe a little bit of rest, or it could easily get a week 3 kind of move that takes it strongly up into the upper 108, 109, 110, that kind of a thing. So we'll be interested to see how software develops this week. Mag 7 as a group breaking out of this consolidation pattern here. This is, you could call this a symmetrical triangle, I suppose, and a break higher leads us to believe that more higher prices are likely. These are the recent highs right in this area, a little over 71 on MAGS, and that's a reference point. If we can get back above those highs, then it's into clear air and should have more room above. While that happens, financials continue to quietly climb a very steep rising 4-week moving average, and energy just kind of chopping around here, similar to crude oil, although holding this breakout move a little better if this matters. Again, these trend lines are just visual notations on the chart. There's nothing magic about them, but if price is above this and can get back above this moving average, then maybe the energy names as a group can get back up into about 63 here on XLE. If they don't want to move higher, the first test we want to see be successful if we're to maintain a bullish viewpoint is this area right here around 56.50. This is a flat 10-week moving average and would be a retest of this trend line here in that area. I wouldn't worry about being too precise with that level if you're watching this, because I could change that very simply. Who's to say which one is more correct or more useful? So the neighborhood of 56.50, it could be 56, it could be 57. That is a level of interest on the energy sector as represented by XLE. Let's go very quickly through the Mag 7 names independently. Apple back down here after the earnings move and holding the 20-week moving, or the 10-week moving average. Amazon back up to new highs, but in between these recent highs from back in May of this year. Google looks kind of similar to the Mag 7 group as a whole, although it didn't finish up high for the week. It opened, it rose, and it came back down to test this VWAP, the trend line, and the declining 10-week moving average there. So call it 353, 354, something like that. That's a level on Google that the bulls would like to see remain as support. Meta continues to struggle. Failed breakout move, took it back below all the moving averages, and it bounced a little bit this week, but it's inside, it's below the moving averages, and still has plenty of work to do. Here's Microsoft, which we mentioned earlier. Big move higher again for Microsoft this week. Can it do it for a third week in a row and make what would be really an astronomical run off of just a garbage-looking chart back to new highs? That would really be something on Microsoft. And NVIDIA in the semiconductor group, pretty strong here. That's a move that we haven't seen out of NVIDIA for quite some time. Look at the size and the magnitude of this buying candle here, and then consider the weeks previous to that. We don't even see anything close until really back in June of 25 or maybe May of 25, and certainly this big reversal candle in April of 2025. Now, we did have a sustained move here that took it further, but that was over the matter of a few weeks. So this could be a change in character in NVIDIA. This is a new, let's see, not quite a new weekly closing high. This week closed at 225.32 after moving as high as 236.54, and this most recent week closed at 206.84. So not, excuse me, that's 223.96. I moved the chart there just a little bit. So 225.32 and 223.96, about not quite a point and a half there difference for a new weekly closing high on NVIDIA. And Tesla, which has been struggling, did manage to put in a hammer reversal here right at the 50% retracement level of this low to this high. And it confirmed that hammer this week, but the problem is there's a very steeply dropping 4-week moving average right above. So Tesla still with work to do. And if we're looking at Tesla, we may as well go ahead and take a look at SpaceX after, let's see, earnings and the first lockup period for this new IPO stock. It got a nice bounce from as low as 105s up into the 132s, 133s. So is this a reversal level? Do we see some follow through, perhaps back up into the anchored VWAP from the start of trading? That's around 151.71 on the weekly chart. That's something we can take a look at on SpaceX for observation. So let's take a look at breadth and participation real quick. Here's the S&P moving up into new weekly closing highs, and the percentage of stocks in the S&P 500 above a 50-day moving average is holding right here in the mid-60s, which is very healthy. Took a bit of an uptick this week, but the percentage above a 200-day moving average took a very sharp uptick and is now as high as, what's that? Let's call it 73 there for round numbers. And that's very solid. You see back in this sustained uptrend of 2024 to 2025, it bounced around in these upper 60s to upper 70s and even over 80 most of that time frame. So if it gets and stays up in this range, that should lend strength to a sustained move higher there in the S&P 500 index. And to take a little different look at breadth and participation in the S&P 500, here is the bullish percents chart, which is above 70. This is a strong breakout here on the point and figure chart. We've got more than 70% of S&P 500 stocks on a point and figure buy signal, and this is an area that it can get and stay in this range, but it also tells us that while breadth is strong, it's in that washout period that we've been talking about as potential for the last couple of weeks. We tend to pay most attention to bullish percent index charts when they are above 70 or below 30. It doesn't mean a reversal is imminent, but it does put us on alert for the possibility. NASDAQ 100 bullish percent above 72, and just a very strong reversal here. It wasn't too many weeks ago we were looking at this and thinking that things were just really ugly. It did get down in this low 30s range and reversed very sharply. And finally, the NYSE as a bigger group there, healthy, 61.4%, not a breakout, not washed out or overbought, and still in bear correction status because it hasn't produced a new point and figure buy signal yet. So there's your look at what's going on beneath the surface. It tells us that stocks, by and large, are participating. All of that goes back to the fact that we see a risk-on appetite returning to the marketplace. It doesn't matter which index, ETF, or group we're looking at. We didn't see anything in the stock or equities world that looked especially negative for an overall group. I'm sure there's some out there, we just didn't cover them. But by and large, stocks returned to a position of strength this week. S&P 500 at new highs, NASDAQ 100 confirming the recent candle reversal pattern and back above the moving averages, and our relative strength relationships all pointing to a return of risk appetite there in the marketplace. Now combine that with the fact that we've got the bulk of the earnings reports are now behind us. We have the results, we've seen the reactions. They haven't all been rosy, but many of them have been good, or at least the reception to them has been good. And so now I think it's better to look for continuation higher in the market overall. And with those earnings reports behind us, we should see the resumption of more swing trading setups emerge. Those have been a little hard to come by, or a little slower, I should say, in recent weeks because, and as I've told Alpha Trend subscribers several times when I go through the charts, many times over the last 2 weeks I saw a chart that looked attractive and like it had potential for a good low risk swing trade entry setup, but you look down here in the bottom right hand panel on TradingView at least, and it would tell you, and let me just give you the example here. If I can type the symbol, pull up an individual chart and it'll tell you when earnings are coming. This one was, they just announced on July 30th. If that was coming up in a couple of days, it would say so. And that's what I saw on a lot of those setups. Things would look like they were worth watching, but then it would say earnings in 2 days, earnings in 3 days, so on and so forth. And I don't make a habit of entering swing trading positions just ahead of a major earnings announcement. So there's the market overall. There's the weekly charts. Here is what we see so far in the Sunday evening session, and it remains pretty quiet so far. We'll see what happens in the morning. I'll have more updates coming this week, both here on Substack. I've been posting some notes. If you're not looking at those, please do take a look at and I'll have them on X as well. So if you guys enjoy your Sunday evening, we'll see what happens tomorrow morning, the start of another week of trading.